Now, what goes up must come down, perhaps even property prices. In an unusual move, the Reserve Bank has signalled that it might take steps to rein in runaway markets. But one of the country's largest real estate agencies is warning the central bank to keep its hands off the banks. Jacob Gribber reports.
It's a complex situation. There are no magic bullets in my armoury.
I just don't know what to do with myself.
There is one area that I think is of concern right now, and that is that investor finance is growing at double-digit rates. A lot of this is interest-only lending. I think it's perfectly sound to ask ourselves whether there are tools that might at least lean on that a bit. The worst that could happen is it doesn't have that big an effect.
A week ago, the word macro-prudential was barely known.
When do you think Australia will take on the macro-prudential limits that have been introduced by countries like New Zealand?
I am naturally hesitant to have government in any way interfere in the market. Any action needs to be specific, it needs to be very targeted, and it needs to have some capacity to be time limited.
Now it's the talk of the town. Monetary policymakers are in a difficult position. House prices have shot up in some areas. Raising interest rates would address that, but could hurt other parts of the economy.
We need to do something to hold back excessive growth in housing prices without using an economy-wide instrument that might not be appropriate for the economy as a whole.
So the Reserve Bank is now considering reaching for a rarely used macro-prudential lever. Or in other words, using tools such as reducing how much banks lend to home buyers.
We've got a problem of distortions leading to excessive investment in the housing sector, investment by investors rather than homeowners.
It's looking toppy in parts, but it's certainly not uniform across Australia. Listings are down across the board, or in Sydney around 16%, across Australia around about 11%. So that would indicate that any heat is starting to go out of the market.
The government and the central bank are reluctant to intervene in the market. They're faced with an economic puzzle no one quite knows how to solve. Part of the problem is dealing with the unintended consequences.
I think markets are best left alone to sort themselves out. You get these big rushes, pent-up demand which gets satisfied, and then the market settles down.
Faced with this conundrum, one option for regulators is to try to talk the market down.
Monetary policy cannot serve two masters. It cannot handle an exchange rate that's too high or asset prices that are growing too fast.
Let me tell you, there's no one more conscious of that than me.
Oh, yes. Now, Stutch, we've seen a massive weekend of house sales and prices. The spring selling market is red hot at the moment. Is it so overvalued, though, that we need the RBA to intervene?
I think it's a big risk factor for the economy. Australian house prices are expensive. They didn't have a correction after the global financial crisis like in many other countries. And it's really being fuelled by something that's extraordinary and out of kilter. These very, very low interest rates around the world and governments, not our Reserve Bank, but other governments printing money. Now, that's pumped up the price of shares and price of houses. And the fear is, if this gets out of hand and investors in particular start plunging into this market with very low yields and returns that they're getting, but thinking, well, if I get in now, the price is going to rise in the future and I'm going to make a profit, that could all end in tears. So the Reserve Bank very reluctantly, and they haven't wanted to do this, and you saw Joe Hockey, he hasn't wanted to talk about it, and suddenly he's been brought around to talk about it as well. They're talking about, and this week said, they might directly get the banks to restrict lending to certain types of housing, such as investors in particular. That's a big new move, and they're really wanting that to bring some heat out of the market.
Maybe just talking about it might have the desired effect.
Jawboning, they call it. If the people out there at those auctions know the Reserve Bank is concerned about this enough that they might stop the banks from lending as much, and they hope to bring heat out of the market. That wasn't on evidence on display yesterday.
No, it certainly wasn't. And David, the amount of buyers willing to pay high prices indicates that. What do you think? Is there still room to grow in the housing market across the board?
Well, if you look at the trajectory of housing prices, they really did flatten through the financial crisis. So, you know, if you think about it going like this, there's still a ways to go. I'm not as conservative as you are, Michael, about housing prices. And when you look at Australians and default rates, historic default rates on mortgages, they're unbelievably low.
Well, so many Australians are interested in the property market. It's our favourite sport, isn't it?